What's up guys, I'm Ritvik. I've been getting a lot of questions regarding trading. I have a couple of questions with me right now, so I'm going to try to answer a couple of them. Question number 1. Is trading easy? Stock trading is definitely not easy. Like every other courses out there, every other subjects, there are a lot of stuff that you need to properly learn. Stock trading can get pretty complicated, especially for a beginner, because people tend to depend on all the online articles, YouTube videos and all that, and there are a lot of false informations out there. So if you use these false informations and this basic stuff to trade in the stock market, it can get pretty hectic. It won't work out for you. You need proper understanding of how the stock market actually works. You need to be pretty good with your technicals. It's pretty complicated. If you put proper effort into it, you can learn stock trading. There are a lot of stuff that you need to make sure that you properly understand, before stepping into the market. So yes, stock trading can be pretty complicated, but yes, still you can learn it. Question number 2. Is trading risky? Trading is risky. To an extent, trading is definitely risky, but trading is all about calculated risk and all about risk management. So even if it's pretty risky, if you know what you're doing, if you have a proper risk management setup, it doesn't really bother you. Like I said in the last video, it will not really affect you, because if you have a proper risk management setup, you know when to cut your losses, you know how to handle your risk, right? So even if the market moves against you, even if you have proper confirmation for an entry, right? If you have a proper stock, if your trading setup is like pretty precise, if you have a proper entry for a trade, the market might still move against you, right? This happens in the market, not pretty often, but yeah, it do happen. Once this happens, there's nothing much you can do about it than to cut your losses, right? So if you have a proper risk management setup, you know exactly where to cut your losses, right? So yes, stock trading can be risky, but it's all about calculated risk. You need to be in the profit in the long run. So if you know how to properly safeguard your capital, I wouldn't say stock trading is something that it's very risky. In a nutshell, as long as you have a proper risk management setup, it doesn't really matter if the stock market is risky or not, because you know what you're doing, right? So if you know what you're doing, it's no longer risky, right? Because there is still a risk attached to the stock market, the entire concept of stock trading. But if you know what you're doing, if you know how to properly do your risk management, it's fine, right? You'll be good. Third question. What indicators do you use to trade? I do not use much of the indicators, right? I use VWAP, right? So if you know what you're doing, then VWAP is pretty basic. I use a couple of moving averages, 200 SMA, 50 SMA, just to understand the underlying sentiment or the trend of the stock. So, but I will not be using these moving averages to, for the crossover for an entry. So I try to trade the proper price action, right? I be plotting key levels and I'll be trading based on that, right? Using the volume as a confirmation. That's how everyone should be trading, especially intraday. I know a lot of people trade indicators. Every person has his own trading setup. So if it works for you, then well and good, but for me it doesn't. Question number 4. What time frame do you use to trade? So there's something that I do call top-down analysis. So where you'll basically be starting off from a bigger time frame and you lower it back to the 1 minute time frame. If you're trading intraday, this is something you should be doing. For a stock, you need to have a proper understanding of the big picture. If you choose a stock, right, take it from top, take a look at the 1-day chart. If you do that, you'll have an understanding of the initial sentiment of the stock, if it's uptrending, downtrending, or side trending, or whatever. So you'll have an understanding of the big picture and you take it down from there, right? You lower your time frame so that you can understand proper levels on all the time frames, right? If you only trade on the 1 minute or the 5 minute, chances are that you might end up missing out on proper key levels that can cause your entry to go wrong. Try to have a proper understanding of the entire big picture of the stock. So you take it from top and you lower it down to the smallest time frame, which is 1 minute.